sovereign wealth fund, or SWF, is a state-owned investment fund created to manage a country's surplus reserves. These funds often originate from revenues tied to natural resources like oil, gas, or fiscal surpluses. Governments use SWFs to invest in stocks, bonds, real estate, and other financial assets with the goal of stabilizing their economy, diversifying income, and securing financial benefits for future generations. Many countries, such as Norway, Saudi Arabia, and China, manage massive sovereign wealth funds. Norway's government pension fund Global is one of the largest in the world, valued at over $1 trillion. This fund invests oil revenue to benefit future generations. Similarly, Saudi Arabia's Public Investment Fund and China's China Investment Corporation play major roles in shaping their national economies. Natural resources, particularly oil and gas, often play a critical role in establishing sovereign wealth funds. Countries rich in these resources allocate a portion of their revenue to SWFs. By doing this, they safeguard their economies from fluctuations in commodity prices and ensure steady investment for the future. The US doesn't have a federal-level SWF, but some states manage their own. One example is the Alaska Permanent Fund, established in 1976 after the discovery of oil in Prudhoe Bay. This fund invests a portion of oil revenues and distributes annual dividends to Alaska's residents, making it a unique model within the U.S. Texas and New Mexico also manage their own funds tied to natural resource revenues. The Texas Permanent School Fund, created in 1854, supports public education by generating revenue from land leases and investments. In New Mexico, similar funds contribute to state education and infrastructure projects. Unlike countries with major sovereign funds, the U.S. federal government has chosen a different path. Instead of creating a national SWF, excess federal reserves are often directed toward reducing the national debt or funding specific programs. This decision reflects the unique fiscal priorities of the United States. The U.S. government's fiscal policies prioritize immediate spending needs over long-term investment through a sovereign fund. Federal revenue streams are typically allocated to social programs, defense, and infrastructure, rather than being invested in diversified financial portfolios like an SWF. One reason the U.S. doesn't have a national SWF is its highly diversified economy. Unlike countries that rely heavily on natural resource exports, the American economy is powered by industries such as technology, finance, healthcare, and manufacturing. This reduces the need for a centralized investment fund. The U.S. relies heavily on private investment markets to drive economic growth. Private equity firms, hedge funds, and venture capital play dominant roles in the country's financial landscape, reducing the need for government-led investment strategies like those managed through SWFs. There have been ongoing debates about whether the U.S. should establish a national sovereign wealth fund. Proponents argue that such a fund could help stabilize the economy during recessions, support infrastructure projects, and provide financial security for future generations. Supporters of a national SWF believe it could generate significant long-term returns, help reduce national debt, and fund essential projects. They often point to examples like Norway's fund, which has successfully secured wealth for its citizens while stabilizing its economy. Critics caution against government overreach in financial markets. They argue that creating a federal SWF would interfere with the country's free market economy and could lead to inefficient investment decisions driven by political motivations rather than market logic. Despite the lack of a national SWF, public pension funds in the U.S. operate similarly. The California Public Employees Retirement System (CalPERS) is one of the largest public pension funds globally, managing hundreds of billions of dollars and investing in diverse financial assets. Countries with established SWFs demonstrate the potential benefits of these funds. For example, Norway's fund not only supports national development, but also stabilizes its economy during global financial downturns. These success stories fuel discussions about SWFs in other nations, including the US, While the United States lacks a federal sovereign wealth fund, state-level funds and large public pension systems highlight its unique approach to public investment. As global financial landscapes evolve, the discussion about a national SWF in the U.S. may continue, shaping future economic strategies.
Thank you for watching. If you enjoyed this video, don't forget to give it a like. It really helps support the channel. Share your thoughts in the comments. We'd love to hear from you. And of course, subscribe to the channel so you don't miss any future videos. See you in the next one.